All right, today we're jumping into one of the wildest, most legendary experiments in the history of finance. It was a massive bet to see if you could turn complete beginners into millionaire traders. This is the story of the turtle traders. It all boils down to a classic Wall Street argument, one that people still have today. Are amazing traders just born that way? Do they have some kind of sixth sense for the markets? Or is trading a skill that you can actually teach, something that anyone could learn if they just had the right rulebook? At the center of this whole debate were two absolute legends in the commodities world, Richard Dennis and William Eckhardt. Dennis was totally convinced he could teach anybody to be a great trader. But his friend Eckhardt, he was like, no way. You've got a natural gift, a talent that can't be taught. So what did they do? They decided to settle it with a real-world experiment, putting millions of their own dollars on the line. To prove he was right, Richard Dennis needed students. So he put out ads in major newspapers looking for people to train from scratch. This was the very beginning of the group that would become famously, and kind of strangely, known as the Turtles. Now, this is where it gets really interesting. Who did he pick? He didn't go poach some hotshots from other firms. Nope. He recruited people from completely different walks of life. We're talking a security guard, a guy who designed Dungeons & Dragons games, even an actor. He wanted to prove that a total outsider with the right system could beat the Wall Street pros at their own game. So why call them turtles? Well, it's a funny story. Dennis had just taken a trip to Singapore and visited a turtle farm, and he got this idea in his head that he could grow traders just as fast and efficiently as that farm grew turtles. It was a really quirky name for a pretty radical idea, to basically create an assembly line for elite traders. Okay, so Dennis didn't just give his apprentices a few tips and wish them luck. Not at all. He gave them a complete, mechanical, step-by-step trading system. Their job was not to be creative or use their intuition. Their one and only job was to follow the rules, precisely and without a single exception. The entire system was built on 4 crucial pillars, and each one was just as important as the others. It told them exactly which markets to be in, the precise moment to buy or sell, exactly how much money to risk on every trade, and maybe the toughest part of all, how to manage their own emotions to stick to the plan. For their timing, the key concept was something called a breakout. The idea is actually pretty simple. When the price of something shoots past its recent high, that's a signal. It suggests a powerful new trend might be kicking off. The turtles were trend followers, and the breakout was their green light to get in. And here you can see that rule in action. See how the price moves above that line that marks the 20-day high? That was the trigger. No emotion, no debate. It was just a clear signal to buy and ride that trend for as long as it lasted. And the same thing applied in reverse if the price broke below a 20-day low. But, the real secret sauce here might have been their risk management. This was totally revolutionary for the time. They would actually calculate how choppy or volatile a market was. In a wild, unpredictable market, they'd make smaller bets. In a calm, stable market, they'd make bigger ones. This kept their risk exposure exactly the same on every single trade. Absolutely genius. Following these rules sounds simple, but doing it required unbelievable mental toughness. See, trend-following systems like this actually lose money on most of their trades. The trick is that the winning trades are absolutely enormous. So the turtles had to be disciplined enough to take a bunch of small losses without losing faith, and have the self-control to not get greedy and abandon the system when they hit a huge winner. So after just 2 weeks of intense training, Richard Dennis handed over millions of dollars of his own cash to this group of rookies. The experiment was live. So the big question, did it work? Did Dennis win his bet? Oh, it worked. It works beyond anyone's wildest dreams. In just 4 years, the turtles, these absolute beginners, earned a combined profit of over $100 million. They proved it, beyond a shadow of a doubt. Richard Dennis was right. Great traders really could be made. As you can imagine, a story this incredible didn't stay a secret for very long. The impact of what the turtles accomplished rippled far beyond the trading floor, shaping finance and even pop culture for decades. In fact, does the story sound a little familiar? 2 wealthy guys making a bet about taking an ordinary person off the street and turning them into a master commodities trader? Yep, this whole real-life experiment was a major inspiration for the classic Eddie Murphy and Dan Aykroyd movie, Trading Places. But beyond Hollywood, the Turtles' legacy is truly profound. They are the ones who really popularized the idea of systematic, rules-based trading. They showed the world that you don't need a fancy degree or some kind of special intuition to win in the markets.
What you need is a solid plan and the discipline to execute it perfectly. That idea has inspired generations of traders.
So Dennis absolutely proved his point. A system could win. But that was back in the 1980s. Today, with markets running 24/7, dominated by high-frequency algorithms, well, the game is just infinitely more complex. And it leaves us with a really important question for today. Is having a disciplined, rules-based system still enough to win?